Hi guys, thanks for tuning in to another episode of Nuggets News. Today we're here with a special guest, and that's the president, one of the founders of Preflogic, Todd. How you going, Todd?
Good. How are you, Alex?
I'm really good, thanks, mate, and thanks for making this work. I know we're on opposite sides of the planet, but Preflogic have been really busy and pretty quietly behind the scenes with their STO platform and the Wizard. So maybe for those that haven't followed, do you want to give an introduction to your background and how you got into Preflogic?
It's a funny story, Alex, now that you bring it up that way. Got five kids. They're right behind me. Four of them are all economics majors, financial analysts, whatnot. A few years ago, they talking about coins and alternative coins, and they're trading them.
Yeah,
I mean, trading them crazy. And if you could have heard some of the arguments we had in the living room regarding why are you trading these coins,
yeah,
I read 100 white papers, and that's what pretty much lured me into it. And more importantly was, back then, 2017, ICO's done, $10 million raised in 7 minutes. You know, $20 million raised in 2 days. That's what that's what enthused me the most, is the distribution power behind the mechanism. That's what got me involved in the space. And then my securities background kind of took over,
yeah.
and that's what happened.
It's funny you say that. I mean, we talk about bubbles, and some people say they're almost necessary because we have that over investment, but it actually leads to good things longer term once the dust settles. And what you've just described there is almost a situation like that, isn't it? Where you're sort of saying, hey, there's something here, but it's not quite mature yet. It's not what it needs to be.
No, I mean, it came on so fast. I mean, in a year and a half period of time, billions of dollars were being raised. It caused everybody's attention. And I remember it was July 27th in 17 that the SEC chief here in the States came out and said, yo, these are all securities offerings. And I think that's where the light bulb really went off for me, as I said, well, that's great. Can we take this blockchain and the smart contract process, okay, and build the regulations into it to provide an opportunity, through technological advancement, and over here in the States, through favorable legislation, where the laws had actually changed, to build a product, a tool that would empower anyone to be able to raise capital. That's what excites me the most, is that with what's happened, okay, everybody pays a lot of attention to security tokens. I don't know about you, but I'm tired of talking about security tokens. I think the market's tired about hearing them.
Yeah.
What really happened is favorable legislation plus technological advancement, okay, plus the internet, low cost ability to distribute, put forth an opportunity where my neighbor, okay, has the same opportunity to raise capital as a larger corporation does to pursue his financial interest, whether that be to purchase a piece of real estate or to grow his business. So with this, barriers are lowered, cost is lowered, the complex is reduced to the simple, and that's what we're most excited about at Preflogic.
And I think that's almost challenging regulators in some way, that they're trying to get their head around. Hey, this is pretty easy for the average guy to do now, as long as it has those legal requirements, and that's all in the smart contract. And it's sort of challenging the narrative of who's allowed to do this. But Todd, you've got a long list of credentials in your background, which we sort of skipped over. I think people at home would love a quick rundown of what you've done over the years.
Okay, no, thanks. Nobody likes talking about themselves, but I started as a stockbroker in 1983. Okay, back then there was no do not call list. Okay, there was no internet. I mean, Alex, I'm dating myself here, but I bought my first fax machine, I think, in 1987.
Yeah.
It cost me $2,000. So that's the old world, and I think that's what benefits me most now. Is that old world was a phone book, a cold call script, and go out there and try to muster up business. And back then, and even today, what were we doing? We were aggregating an audience called clients. So the stockbroker trusted his firm. Okay, the client trusted the stockbroker, who went out and aggregated the audience. Okay, I worked at a few different firms, mainly on the retail side. And my job was to go up and down the East Coast pretty much and train people on how to raise money. Okay. And then in 1989, I opened up my own firm. Okay. And in the mid 1990s, it was almost a paradigm shift in the investment banking industry or sector, so to say. Back then, there were literally hundreds of regional broker dealers, small brokerage firms where if you wanted to raise or your company needed to raise $500,000 or $1 million or $2 million, you could go get an IPO done from one of these firms. Now, a guy your age, you've never heard of a $2 or a $5 million IPO. Every IPO you've heard of is 100 million, 500 million, 3 billion. Okay. Now, what happened then is the regional broker dealer became extinct. All the money then became aggregated in private equity funds, venture funds. So the scope of who was underwriting who or who decided who was getting underwritten became a very small crowd. And that's what excited me most when I saw the ICO. I said, wow, small businesses, and at least in the United States, make up almost half of the employed force. Now these small businesses can re-engage and raise capital utilizing this type of tool. So my background, small cap formation. I've sat on the issuer side for 15, 20 years. So I know both sides of the conversation. And what this tool does is empower someone with education, which will provide them how to go out and almost, I don't want to say this to get in trouble, but almost be a broker dealer upon themselves without having to achieve a registered status with FINRA.
Yeah. I guess off on a little tangent here, what are the similarities between, the .com era when, all that capital was being raised and what you saw in ICOs and I guess where the dust has sort of settled now?
Enthusiasm. Okay, the .com era, I was part of it. I was in 1998, 99, 2000, I was CEOing a tech company. And we had a very strong list of clientele. As a matter of fact, Chris Carico, who's also one of my partners here on Preflogic, he worked with me back then at a company called Tech 21. The similarities were, and I remember this during football bowl season, you couldn't advertise enough. There was a .com company on the 50-yard line of every bowl game. Advertising was fierce. The competition for capital and the enthusiasm, there was a whole new world coming toward us. Remember back then, I remember when Jeff Bezos was playing paintball, paintball with his staff, 20, 21, 22 years old, this kid who had the idea of, hey, can we sell books online? 25 years later, what are we doing, Alex?
Yeah.
For lack of better words, we're selling stock online. It's come full circle to the capital markets. Now, you understand the status quo does not want this to occur. I mean, Wall Street likes the way things are right now. Yeah. But on the retail side, when you see the advantages, it provides a small business. I think it's beneficial.
Yeah, and if I can just build on that, I think the idea of we're living in this digital age, and as soon as I read about Bitcoin a number of years ago, why can't we transfer value digitally just as we're having a high definition video conversation? And the idea that banks are being disrupted and they do have a lot of that rent seeking nature, but it's the same for Wall Street and investment products. When the small guy goes to buy or sell shares all the way up to raise capital, there's these people that take their clip on every step of the way. And those, I guess, as we've already touched on, the borders have been broken down to make it easier for the average guy to do this. But that is sort of challenging regulators, as you say, as well, isn't it?
No, and I think I understand the regulators' challenge, but as these products start to come out, okay, and they start to come out in these communities, okay, I think one real estate deal can be compared to the next, and because of this digital age and Telegram, okay, and social media, bad deals are going to be found out pretty quickly. Yeah. Good deals are going to be promoted pretty quickly. So where those aggregated audiences used to exist only at brokerage firms and you had to pay dearly to access that audience to raise capital. I mean, the standard deal back then was 10% commission, 3% non-accountable expense, and warrants, equity in the deal. Now, good deal. Hey, there's a good deal over there. I mean, how many Telegram channels are going to pump it up and guys are going to race to it without the issuer having to endure that expense? That's what I think is most liberating. Now, the more people you can teach on how to do that properly, I think it might even evolve into a world where rather than the SEC or the regulators having to regulate the players, they can regulate the tokens and the smart contracts that govern them. It might become an easier game.
Another thing I think that that ICO boom did do for the general public was open their minds to investing. You know, we had a lot of everyday tradies and individuals that for the first time thought, you know, I've never heard about how to invest in a Series A, or I've never been capable of investing in early stage in a company. And it's really sparked their interest in investing again, I think. Would you agree with that? Or
I think it sparked their investing, their desire to invest singularly. I mean, like I've got we have 4 children, ages 23 to 33. They bought a stock here and there. But when the ICO market emerged, well, they thought they were traders. I mean, Alex, they were gangbusters. They were enthused. And I think that's the good of it. Bring in the regulation. Regulation, to some extent, is good. Okay, it can protect the investor. Okay, the digital media, mass media, can also protect the investor in that news travels fast. Okay, good news or bad. And I think overall, I think it's good because now that younger crowd that lives on their phone is engaged in our capital markets.
Yeah,
and I think that's great.
I was going to ask you about the amount of capital that's out there these days, because, you know, a lot of people are saying those stocks are, you know, overvalued and the markets are stretched. But on the other hand, we've never seen more capital being raised for these startups. You know, $100 billion for an IPO has become pretty normal. And when you look at the amount of money that wants to invest in the latest thing, there's no shortage of it out there, but it wants to find a home. And I think these other markets are where it's going to flow to.
I think the challenge is, okay, you guys that run the VCs, your investment banks, your funds, your private equity funds, they know what they're looking for in the deal. They know the issuer desperately wants capital, and they leverage their way into the deal in exchange for that capital. Okay, now a first stage or a first round of funding can be had by the novice investor. That's where I think the regulation pays off. Higher risk, but much higher reward when he can buy in at a lower valuation. I mean, once a VC has taken or a bank has taken a company through 3 or 4 rounds of private finance, it's the little guy that ends up taking the big guys out because that's their first opportunity to purchase. I like to see the little guy have an opportunity, you know, to get in really and make a difference for himself.
I think we're going to see more transparency on that front as well, in terms of the general public being aware that there was, you know, a big round done at 10 cents. If they're about to be sold a lot of shares to at 50 cents, for example, this can be seen in smart contracts on the blockchain as well, can't it?
Exactly.
Fantastic.
Sure.
So, do you want to talk about maybe a few of your favorite parts of Preflogic then, and how it is solving these problems that we've discussed today?
Without talking about security tokens and talking about the product itself,
whatever you're allowed to talk about.
Smart contract, very quickly. I mean, on the smart contract side, hats off to our developers. I mean, right on through the CIRC token, which is our version of the ERC20. Yeah. Bill layered the coding with proxy smart contracts, so that on the fly, the token itself with easy manipulation could be programmed to take on any jurisdictional change or regulatory change, so that it would occur through all tokens without interrupting service to the issuer or the investor. On the fund side of things, what I'm anxious to get on with is we're looking for a commercial release in 90 days. In about 30 days, we're going to look to pre-board our first 100 or 200 average guys who want to use the tool for their own empowerment. I mean, when we look at, let's take a look at a Preflogic turnkey type situation where, when I say specific purpose and turnkey, let's say this deal that anyone could take advantage of is a fix and flip real estate turnkey security token offering. So fix and flip is a pretty definable business plan. The parameters for operating with it easily defined, covers any type fix and flip type model, okay? And where over here in the States, we've got programming like the Property Brothers, TV programming, Property Brothers, channels dedicated to just showing people how to buy this property, fix it up. What's everybody missing? The first $200,000 to go out and live that dream for themselves. Yeah. Okay, in a turnkey product that we envision, the issuer, my neighbor, okay, will pick up a website, pre-done, okay, for his use, videos that explain and market his objective, a skeleton form private placement memorandum prepared that his attorney would obviously have to sign off on, the wizard so that he can easily do his offering, and the CERC token. So realistically speaking, everything's prefabricated. So that issuer can show up and within 48 hours be out raising money to purchase his first property in the medical corridor of Buffalo and to live by that business model. All he's got to decide is what percentage of cash flow or net income does he wish to share with the investor and what percentage of the back end.
Yeah. So to explain this in everyday terms for some people that are watching at home, if I'm a good tradie or builder, and my wife's pretty familiar with all those programs that you just described about flipping houses and whatnot, if you've got that business model out there but you don't quite have the capital, you can go out there and say, look, we think we can flip all these houses in this suburb and make a 10 or 20% profit, and people can look at that business model, but then they can also build their, I guess, reputation, can't they? And people say, geez, we want to give these guys more capital. They're really good at what they do, and they can continue to do that through the platform, and the reward goes to the investors that back them in the first place, but they're good at something, and that can apply to, I guess, any field, can't it, once we have those parameters in place?
Different vertical markets, you're exactly onto our business plan. Real estate fix and flip first. Could you do it in the art world? Yes, you could. Any asset-backed solution becomes a product more easy to sell for that issuer. If it's asset-backed and the terms of the deal are fair, then he should be able to go to his warm market in any extension of it and say, hey, you know me, you trust me, I'll do all the work, I'll take 20%, you can have 80%, let me build my credibility. Now, if he hands them back a return in an asset-backed scenario, okay, a protected scenario, that outperforms the Standard & Poor's 500, then those same investors aren't going to say, well, I gave you 5 the first time. What happens then, Alex, is in the asset allocation chart, the 65, 70% of your investable funds that are dedicated to safety and income, now that part of their portfolio starts to open up with a person that they can trust, who, through blockchain smart contracting, things are transparent, profits are distributed. It becomes a very easy transaction to become part of. I believe you'll see young MBAs graduate college, latch onto the program, have a little success, prove credibility, and within a couple years be doing 50, 100, $200 million raise ups based on the credibility that they brought on themselves. And it was the tool that gave them the opportunity to do that. Maybe not a great example, but like eBay or Amazon each have vendors, okay, and those vendors are rated. John, the real estate guy, is going to develop a reputation if everybody can see transparently that he just delivered a 19% return to his investors this year. Who doesn't want that?
Yeah.
and it starts to build itself. I think what's going on right now, I think why people might be tired of hearing, especially the crypto enthusiasts, tired of hearing about security tokens, is that's what everybody's focusing on, buying them. Hey, what about empowering people to sell them, okay, issuers, to represent good deals wrapped in this security token container to people who trust them? Take one of your online influencers. In the United States, we've got 34 million home-based businesses, 18 million individuals that make their money by selling a product that in most cases is overpriced to fund their compensation plans, and exchange that and their audience with a product where they're selling themselves and a fair return and participation to their investors. That's pretty powerful.
And more money is going down this path, isn't it? Back in the day, there was a smaller amount. So I just think private capital has become more popular, or it's definitely staying private later until it goes public with these stretched valuations. And I think the private side of things is going to grow a lot faster than the public markets. Would you agree with that?
Respective to the evolution that's taken place, yes, I think.
Just
I
the
think
way capital is
more,
raised, yeah.
Yes, I agree.
Yeah.
And I think it's going to come about it kind of inside out, not by the big firms who want to do a big STO, but more so by those that can take advantage of what's transpired, motivated by their own financial success, and knowing that they get more of that by sharing it with those that invest. Yes.
How do you see that the education side of things? Obviously, we have Bloomberg and all the big boys, making their material and data for the stock market. But as we have these smaller niche markets, how are you guys going about the education, or where do you think that's all going to get it built out from? Is it from YouTubers and other people in the community, or are there going to be industries and people come into this space and build these products that need to fill the gaps?
I'll give you the answer in two parts, one on the issuer side, one on the investor side. On the issuer side, I'm going to head up a program where over the first 60 to 90 days, where we train the first 100 or two, I'll archive all the podcasts. I'll archive all the webinars. I'll open up a live teleconference once a day for an hour, questions, and basically how much different is it in a static model? What's left to teach the individual? How to raise capital. I spent 15 years training people how to raise money for other people's products. It's a lot easier to sell yourself and a fair product. So on the issuer side, I think that's most important. I think it's more valuable than the security token itself. On the investor side, what bothered me about the ICO boom was most people thought they were buying something that represented equity. And I really didn't like the fact that even my kids didn't know. Okay, between them, there's 20, 25 years of expensive education. Okay, they didn't know. I think of a couple people, I think if you start out with the basics, what is market cap? Okay, what is your pie? What is your apple pie worth? What is the Preflogic's pie worth? Okay, what is it valued at in this offering? Well, if Preflogic valued its pie at $10 million and its competition valued their pie, okay, market cap wise at 60 to 300 million in their round one finance, I think if you teach people to compare that and then evaluate once the technologies are developed and we're at the start line, whose opportunity is bigger than the others? And if the market opportunity is the same and it boils down to marketing, then we can plug into guys like Alex and who have an audience. And if they vet out the opportunity to be one that should be taken advantage of, they will. That's market cap alone. You could start to talk about PE ratios.
Yeah.
Teach somebody, okay, this pie earns X. Okay, this pie has the opportunity to earn X. Is it a good buy-in price? So I think the education side, on the issuer side, we'll take care of it. On the education side, we're going to dabble in it, because in educating the issuer, you almost have to. If you're going to encourage him to put a product out there worthy of being purchased by somebody who trusts him. I think people are up for risk. They don't mind. Nobody likes to lose money, but if you lose it fair and square, okay. It's like, it's like going to Vegas a little bit, but they want to be able to evaluate the opportunity. And I think there'll be services out there people can subscribe through, almost like tip sheets. I mean, the information will be out there. If the market's there, you're sure the periphery of the market will exist.
Yeah, something that we're pretty passionate about is the education. And unfortunately, a lot of people come to this space and see something worth 1 cent and they just don't have this concept of market cap in their head, which once they do understand it, they kind of think, oh, okay, that is the way to start thinking about these things. Well, Todd, I've thoroughly enjoyed it. We've been talking for half an hour already. Is there any final thoughts for people about anything that you guys are doing, or how they can get involved, or what you think that's really important for people to grasp?
Yeah, I'd love everybody to go to our website. Okay. Take a look at the video. The video demonstrates the issuer and the investor journey in a step-by-step process with the tool. I don't think the word security token are used more than 3 times in it. It's a process. Sit back, watch the video. Then ask yourself, would I like to raise $50, $100, $200, $500,000 to go out and make my first purchase in real estate? Would I like to accelerate my retirement date? Would I like to take control of my financial status in a more predictable fashion? Okay. I mean, when you measure it against real estate, it almost boils down to and if I raise this amount over the course of time, and the real estate works for me in this way and produces this, and I continue to add to the volume of property I can acquire based on one skill set, being able to market myself. When can I retire? How much passive income can I gain? And I think very simply, if you would put a 30-second ad on the Property Brothers programming, television commercial ad that said, hey guys, the only things you're missing is the down payment. Come here, we'll show you how to get it.
Yeah.
I think the phones would ring off the hook, or at least they used to ring off the hook. They'd use the online. Yeah.
It's very interesting concepts, and we'll continue to talk about it on the channel, and I'm sure we'll have to have you guys on again in the future, Todd, once you've making more progress. So thanks so much for joining us today, and I'll put those links in the description below.
All right. Thanks, Alex.
Thanks, guys.